I'm McGee Wolf with the Wolf Group, and today what I wanted to share with you is the difference between pre-qualification and pre-approval. They're vastly different things, and you're going to hear those terms referred to, so I want you to know what that means. You've started the home buying process and you hear words thrown around like pre-qualified and pre-approved, and you may think they're the same thing, but they're vastly different. A pre-qualification essentially means you've had a conversation on the phone with somebody, they've taken down your information, formed an application, pulled your credit, and in 10 minutes, boom, they say, congratulations, you're pre-qualified, and you're excited thinking you're ready to buy a house. That's not what it is. You are not ready to buy a house because you really need to go to the next step and get pre-approved. Now, all the good realtors are going to want you to be pre-approved as compared to just pre-qualified, because when you're pre-approved, it means all of your income and asset documentation has been reviewed very carefully. All of your credit report history has been reviewed very carefully. They're looking for disputed accounts or anything that might derail the process for you. It's very, very important to the realtor that you're pre-approved because they're getting ready to invest a lot of time and energy in helping you find a home that meets your criteria. So they want to be sure that when you come across that home, that you're able to write a contract on it. And it's going to be so important to you that you have the peace of mind knowing that you're actually pre-approved to write that contract. So what the loan officer should be doing is reviewing all that information, making sure that your documents match the application exactly, to the penny, that your income is accurate, to the penny all your assets are entered correctly. And then they take your file and run it through something called automated underwriting, which is a system that either approves you or says, well, not quite yet, you need a little more work, you've got to adjust a few things. So once you have an automated approval through that underwriting system and all the documentation matches the application, then you're pre-approved and you're able to relax and go find a home that meets your needs. So it's very, very important that you get pre-approved as your first step before you start investing a lot of time looking at homes. You don't want to get the cart before the horse, which so often people do, and it's really frustrating and stressful for them. So I'm trying to help you prevent that. Get pre-approved, step number one. All right, now, a few words of caution. You're excited you found the house. You sign the contract, and your realtor says, well, let's give a deposit check. So that deposit check, $500, $1,000, $2,000, whatever the amount. Make absolutely sure that you don't pull any cash out of the safe in your house or out of your pocket, combine it with a withdrawal from your bank account and go get a money order, and you're commingling funds that way. Remember, you may have heard me say already, cash is your enemy or not your friend in the mortgage transaction at all. So be very, very sure that any money that's going toward this transaction comes directly out of your bank account. So if it's a $500 check, make sure that we can find a withdrawal of $500 if you want to get a money order, or you provide a handwritten check that we can immediately tie to your bank account and make sure that that's exactly where the money came from. Don't make that mistake, because if we are not able to paper trail it, we can't use that money. So now that you're pre-approved, we have a great snapshot of your financial life. So between now and the end of this process, make sure that nothing changes in that picture. Don't change your employment. Don't let anybody pull your credit, because guess what? The day before closing, our closing department is going to call your employer and make sure you still work there. If you don't, everything stops. Also, our closing department is going to take a peek at your credit report to see if there have been any new accounts open, any credit cards that have been charged up, anybody that's inquired on your credit. Don't let anyone pull your credit. It's very, very important. You don't want anything to change in your financial life. I did have a guy one time. He was so excited on Friday, calls me and tells me, oh, I got a new job, and so we're closing on our house on Monday, and I'm just going to be in a better financial position than I was in my old job. And I had to break the news to him that the only way he was going to close on that house on Monday is if he got his old job back. Or if he was going to have to wait another month or so being on his new job to get all the documentation that he was employed there, had check stubs, etc. It was a mess. But guess what? His wife learned of the problem, and she got it straight. She made sure he got his job back. It was great. It was great.